Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today we're going to be taking a look at the Bitcoin dominance, the XRP, Bitcoin charts, as well as the heat maps to just kind of get an idea where we're sitting right now heading into the weekend. So let's not waste any more time and let's get into the charts. For additional information and exclusive perks, do consider joining me and the rest of our community on Patreon. First off, taking a look at the Bitcoin dominance chart. This is the weekly chart. The price had been trading in this long-term channel for quite some time, basically getting locked in back in about January of 2023. We have now started to break to the bottom of this channel and break out of the bottom side, even though we have gotten a little bit of a bounce here recently. So now we'll go down to the daily, zoom in here a little bit. You can see that the price basically had a 5-wave move up. It's had an ABC corrective wave to the downside, breaking below the bottom trend line and out of the channel for the first time since getting locked in back in January 2023. Price didn't quite make it down to these lower fib levels and has made a nice little move right here, bouncing to the upside. Price also formed a nice bearish order block right here on the daily chart, which could potentially act as resistance, sitting at around at about that 59.64% range. If we kick the indicator back on, you can also see that price is trading well below the Gaussian channel on the daily. And when you go back looking at this chart, you can see that it basically stayed above the Gaussian channel for quite some time, till about right here in July of 2025, right as it was starting to form this ABC corrective wave to the downside. But it is starting to look like this ABC is about finished, so it'll be interesting to see what happens right here in regard to this bearish order block acting as resistance as well as this lower trend line. There's probably a fairly good chance that we're going to see this come up back into this area. So I'll be keeping an eye on this to see if we get a rejection off of this order block, retesting this lower trend line, because if we do get a rejection here heading to the downside, that could have a substantial effect on the altcoins, but we'll have to wait and see what happens. First, taking a look at the XRP chart, I'll be jumping through a few different time frames here. This is on the 4-hour chart. You can see that we've formed a nice inverted head and shoulders pattern right here and are now working on forming the right shoulder. As price pushed up into this bearish order block right here, it found quite a bit of resistance in this area, getting rejected at right about that 50% range. But there is some nice structure being formed since price has come down into this area. We've formed a nice bullish order block right here on the 4-hour chart, which, as you can see right now, is acting as support at this very moment, with this candle coming down perfectly to the very top of that order block. We also have a bullish BISI on the 4-hour right here, resting just above that. So there's quite a bit of liquidity sitting right here in this area, and this is likely going to act as a support zone for price to move up further. But looking at this from the 4-hour perspective, this subwave right here very well could be the 1 and the 2 of what could become a 5-wave move to the upside, moving out of here, potentially heading up into these fib levels right here, sitting around that $3.09 range. It's also interesting to see where price is currently trading right now, and keep this in mind, because if we run a measurement from here, measuring up to this upper trend line, you can see that it's about 7.5% before price would hit this area. If we zoom out and look at the daily to get a better look overall, you can see where this inverted head and shoulders pattern is resting. Now I'll go ahead and remove this just so it's a little bit easier to see the chart, but we are still sitting down in the range of the termination point of the wave 4 on the pattern that I've been talking about in my last couple of videos. Now zooming in here, the wave 4 still has not invalidated the pattern by hitting the invalidation point right here of the wave 1 structure. This bullish BISI on the daily right here acted nicely as support right here at about that $2.70 level, which now gave us a second point to form this lower trend line, giving us a very good idea of where support could be found if price does continue to move down into this area. Subsequently, it was right in the area of a weak doji that you could see right here, wicking right through that same area. I just don't have it marked on this particular chart. So that 8% move to the upside would be taking us to this trend line. And you can see where the price is sitting now in correlation to the all-time high, as well as the potential for this wave 5 move if it has enough steam to break out of the rim line of the cup and handle pattern, getting up here to the 618. But as I've said in some of my other videos, I think it's likely that it's going to be a little bit weaker. If we don't get the momentum that we need to break out of this area, it's going to be very challenging to get up here. And there's also a chance that we could get a truncated fifth down in this area, ending this termination perhaps just below the all-time high, perhaps even sweeping it, kind of faking everybody out to the upside. So if we do get to this range, that's one thing we need to keep an eye on when we get in this area, because you know as well as I do that the market makers and the institutions wouldn't hesitate to get everybody in the market long to fake them out to a bigger move to the upside and then just crush this sucker. So I will be watching to see whether or not this ends up being a truncated fifth, or if we can actually make it up here to the 618 as marked by the Fibonacci levels. And zooming out and looking at this overall, you can see that this cup and handle pattern is still very much in play and is moving along very nicely, forming this handle with 2 points to the top now, 2 points to the bottom. There's also a chance that if something really good comes along, which is probably pretty unlikely at this point, but if something good happens in the news, the economy, I don't know what it would be, we could get a nice move out of here. And if we were really lucky and we did move up out of here, perhaps we could even see something like an ABC correction forming kind of in this area here, and then getting a bounce off of this rim line as a retest and perhaps moving even higher. But that's speculation at this point. We'll just have to see how it goes. Right now, I'm just focused on seeing what price is going to do developing right here in regard to that inverse head and shoulders pattern. But it's great to have this additional structure here resting above this structure, which has already acted as support here and could potentially act as support in the future. One thing we definitely don't want to do is come breaking through this, because if we take out these support structures here, the most likely target on the chart is going to be this weak doji reverse waterfall on the daily, resting at $2.27. Taking a look at the XRP Heatmap, this is the 1 month chart. You can see that there's not a ton of liquidity resting below current price. When price did come down here to set that low that we was just looking at, it just dipped into this little band of liquidity right here. It didn't get very deep in it, leaving the majority of it behind. And even though this is much lighter, there is still liquidity here, millions of dollars of liquidity moving up right through here, as you can see. But when you look above this previous high here, above current price, liquidity sits kind of in that same range and starts to increase as we move upward past the $3 mark, with a very thick band of liquidity resting right here centered about that 315. You can see the jump up to 42.94 million resting right here in the center, compared to just the couple $1 million that you'd see down here at each corresponding level, as well as below, with the thickest band of liquidity resting up here above this high at about that $2.39 range. The liquidity surrounding that area is quite a bit thinner, resting at about $3 to $4 million per point on the chart. But once you get right into this center, you can see it hops up right there to 58.57 million. Down here in this band, 47 million. So there is a considerable amount of liquidity resting right here compared to all the liquidity here. The difference is that all this liquidity is stretched out to where this is concentrated, which makes another good case that if we do see that fifth wave breakout, this would be a likely target. It would seem reasonable to me to think that if they were going to bring the prices of cryptos down, or there's going to be some kind of a crash with the stock market or something to that regard, that they would want to mop this liquidity up while they have the chance to do so. Because if price keeps moving down from where we are now, it's just going to get harder and harder and harder to get back to these levels to clean this liquidity out. Doesn't necessarily mean that it's going to happen, but it makes a lot more sense to clear this out now, especially with more institutions, hedge funds, and more adoption in regard to XRP, because it's putting more pressure on the existing supply as more people are buying it and holding it rather than just trading it. So the more people, the more institutions and hedge funds and corporations start to get interested in XRP, start accumulating it, it's going to put more and more pressure on the existing supply that's in circulation already. Even though Ripple still holds something like 30 to 35 billion XRP in their reserves, that's going to be released on a monthly basis slowly over time. So the more interest and adoption that comes in XRP, the more likely it's going to be that the market makers are going to chase down these thick bands of liquidity. Because just look how many XRP you could accumulate just simply by bringing the price to here and then up to here. Now hopping over and taking a look at the Bitcoin chart. First we'll look at the daily chart. Price had been trading in this channel right here going back to about mid-August. Now we have a very clear-cut ABC correction moving down into this bullish order block just below current price. This order block also has a bullish fair value gap resting right in the middle, but it's on the 4-hour chart rather than the daily, kind of giving it a double effect because there's quite a bit of liquidity in here, but at the same time, a lot of buy orders sitting right in this same area. And as you can see, price hovered here for quite a few days, about 4 days it looks like, before reversing up to where we're at right now. Now that 7.5% that we saw on the XRP chart, if we come here on the Bitcoin chart going to where current price is trading now, up here to the area that I believe that price is going to go, which is the range of this bearish SIBI and this bullish order block, you can see that that same measure of move sitting at about that 7.5 range that we saw in XRP would basically take the price of Bitcoin right into this area, which would fill this CME gap, which is currently resting at about 117,200 all the way up to about 119,360, aligning perfectly with this bearish fair value gap and this bearish order block. So if price did measure out to that same measurement that XRP did and the market started to move to the upside, it could fill this CME gap right here, then potentially see the rejection that I've been talking about and been expecting in this same area just below this lower trend line before we see a measured move to the downside, which I still believe is coming. It's certainly not going to happen overnight, and it's going to take a little bit of time. But if we look at the chart right here, coming out of this ABC corrective wave, once the price broke out of this channel, it came down perfectly and retested off of the upper trend line right here. It's also formed an additional bullish order block here on the 4-hour, as well as a bullish fair value gap right here on the 4-hour, which has already supported price and acted as a draw on liquidity when it came down to retest that upper trend line. It looks to me like this could be the wave 1 termination here, moving into the wave 2, which if it's not already in place here, could come here very soon. So this wave 2 could be sitting here, or if price does come down a little bit lower, it could be sitting in this area, perhaps filling this gap with the full body candle rather than just the wick. But it looks to me like this could be setting up perfectly for a nice 5-wave impulse move up into the area of this CME gap. So far, things seem to be going right according to the plan, as I've been talking about in my last couple videos. And if you didn't see those, you might want to go back and check them out because it will clarify a lot of what we're seeing here. But when looking at these charts overall, it seems to me like there's a very clear pathway to that exact premise that I've been laying out. And once this CME gap is filled right here on the daily, I think there's a very good chance that we'll end up getting rejected somewhere in this area, and then having a big measured move to the downside. At that point, we'll want to be keeping our eye on this lower trend line, because if we punch through this, it's probably going to accelerate the move to the downside. But don't forget that we have this old CME gap sitting right down here, centered about 92,250. It's been itching to get filled for quite some time. Just about every YouTuber who covers crypto has talked about this CME gap since it formed, and we have yet to see the price come back to this area and fill it. It's been quite some time since that formed, going all the way back to April. But this is starting to look more and more likely with the structure that we currently have sitting here on the chart. And I know a lot of people in crypto right now are expecting price to break up, moving up considerably to a blow-off top, but I honestly don't think we're going to see that. I think we're going to see a rejection off of this bearish order block after we fill this CME gap with a measured move to the downside, down to at least this CME gap here. Then I think at that point, we could see a big move back to the upside, potentially going up to that 130,000, 135,000 range. But as it sits right now, that's speculation. We'll have to wait to see what happens once price moves down here and see how things are going, then reassess. But that's definitely an option that's on the table. But keep in mind, it's certainly not guaranteed. When we jump over and take a look at the Bitcoin liquidation heat map, this chart goes along perfectly with the premise that I just laid out for you. We can see the liquidity down here. When the price came down, it took about half of the liquidity resting right here, which was sitting at about 162.4 million, but after the candle hit, reduced it down to about 30.66 million. So a considerable amount of liquidity was taken out at that point in time. But there is still quite a bit of liquidity resting down in this area here, down to about that 105,000 range. But when looking above current price here, resting above this previous high, there's even more liquidity resting up in this area. There are certain areas where the liquidity is very concentrated and is probably pretty enticing to those market makers. But it's no coincidence that the thickest band of liquidity that we're seeing on the charts, centered right in this area at about 205.65 million, and this second band right here, just under 200 million, is resting right in the area of that CME gap. That CME gap actually starts down in this 117,000 range, so that gap's sitting about right here, which makes it even more likely that it's going to be filled previous to the move to the downside, because price is going to have to jump through, fill that CME gap to get to all the liquidity right here. But this area on the chart right now has probably been on a lot of the market makers' minds, because I guarantee you they would love to suck this liquidity out of here. But it makes a lot of sense how and why price would move up through here, taking out this thickest band of liquidity, filling that CME gap, taking this thick band out, then making a quick move to the downside. Why most of the retail traders are talking about a blow-off top and going to 150,000, all piling in here on the move up to this area, and then getting caught slipping at the last minute when price starts to move to the downside, and they're all expecting a continued move up to set a new all-time high, and perhaps even a blow-off top. But I just don't see it happening. The market environment that we're dealing with right now, with the economy, and even with the rate cuts coming, regardless of whether or not they cut a quarter point, they cut a half basis point, doesn't matter. I think overall, cutting interest rates is going to be bearish. Generally, if you look back on the charts, you'll see that these times of interest rate cuts, especially when there hasn't been one for a while, tend to be a sell the news event. There's a very good chance that's going to be the case now. But it would be a great opportunity for the market makers and the institutions and the hedge funds to liquidate retail, getting them to chase all the way up here, cleaning out this liquidity, filling the CME gap, then crashing price. I've already been hearing that same old story on YouTube in quite a few videos, quite a few comments that I've been reading on different videos that I've watched today, and I must have read blow off top, blow off top, blow off top a dozen times today. So the retail mindset is already starting to get to that point again, and I think they're going to be sadly disappointed. I certainly could be wrong. We could come tearing through here, set a new all-time high, go up to 130, 135,000. But I think if you really look at things overall, with what's going on in the economy, what's going on with the job market, with the potential interest rates, what we're starting to see in the real estate market in all the big cities, especially places like Salt Lake City, Las Vegas, etc., I just don't see anything that's going to be helping us get up to those areas. It seems to make a lot more sense to see this liquidity cleared out, CME Gap filled, price dropping down to the lower CME Gap at about 92,500 range. And at that point, we'd basically just have to reassess, because if things don't start perking up, we very well could see a move even lower than that range. But we'll have to see how things go in the coming weeks and keep our eye on the markets. But one thing's for sure, I have a feeling it's going to be very interesting. We live in a day and age where the president can send one tweet and all of a sudden you're out sleeping on the sidewalk in a sleeping bag. So don't forget to hit the like button, subscribe if you haven't already. Thank you so much for watching, and have a great night, everybody, and I'll talk to you soon.